Most investors think wealth is created by picking the next multibagger stock. But in reality, some of the largest family offices, sovereign funds, and institutional investors focus more on asset allocation than stock picking. Because over a long period of time, how you allocate capital across asset classes often matter more than which stock you buy. Let me explain why. If your entire portfolio is concentrated in equities only, your wealth becomes highly dependent on market cycles. And the problem is, markets don't move in straight lines. There are periods where equities outperform massively, but there are periods too where debt becomes far more attractive because of high interest rate. And in periods where inflation fear and global uncertainty rises, gold becomes attractive. Different asset classes behave differently across economic environments. That is why sophisticated investors diversify across equities, debt, gold, silver, and liquid instruments. Not because they lack conviction, but because they understand risk. For example, during periods of high inflation and uncertainty, gold often acts as a hedge for risky assets. And during market slowdowns, quality debt instruments can provide more stability and predictable income. During long-term economic expansion, equities become the primary wealth compounding engine. The objective of asset allocation is not to maximize returns in a single year. The objective is to compound wealth consistently across different market cycles and controlling the downside risk. Because 50% drawdown requires a 100% return just to recover to the original capital. That is something many investors don't understand during the bull runs. This is why wealthy families and multifamily offices regularly rebalance the portfolio. When one asset classes run up significantly, capital is gradually shifted into areas where risk-reward ratios becomes more favorable. It is a disciplined process, not an emotional one. And this is why most retail investors struggle. They usually increase exposure after market have already rallied and panic sell when the market corrects. Institutional investors often do the opposite. They use volatility as an opportunity to rebalance strategically. At the end of the day, successful investing is not just about finding the right stocks. It's about building the right portfolio. Because stock picking may create wealth, but asset allocation is what preserves and compounds it over decades. Thank you for watching and make sure to follow DPNC.